Hello guys, and welcome to my YouTube channel once again. All right, so today is the beginning of a new week and I want to do analysis based on what we have here, and then I want you guys to watch closely and learn from it. All right, so if you can be doing this kind of analysis every beginning of the new week, you can always get very high probability trade setups that you can trade and hold for a reasonably long maybe time. All right, so even if most time sometimes you might be getting it wrong, but trust me, if you can do this consistently, only one setup alone that goes well for you can give you the profit that you ever wanted for a whole week, because you will know where to channel your, you will know what you'll be expecting, the direction you'll be expecting the market to go, and you will know the possible trade setups to look for. All right, so we are on the weekly time frame like I said earlier, and this is volatility 50 index, one of my favorite pairs. All right, so what we have here, you can see the market has been buying and buying and buying until it started selling and sold, and there was a change of character around this point. Around this point here, you can see the market changed character, but that's not my concern. Let's put this trend line to see how the market bought. So you can see this is the trend line. If you want to put a trend line very perfectly well, anyhow you put it is correct, like this. If you put it this to join the first two lows, you can see the first two lows there, it is correct. Then you notice the market has not been coming down to touch this trend line for a long time, so you can adjust it to get something like this. If you have this, is still correct too. If you have this is also correct. All right, then, and you can also decide to place your trend line this way, like take it to something like this, so you can have more touches. All right, if you keep it this way, all right, if you keep it this way, then also understand that anytime the market comes to touch this particular, although it has already happened, so no point talking about that. So even if you keep it this way, it's still correct because you have more touches. All right, you have several touches on this trend line. You can see the first touch here, and this is a second touch. Yeah, then we have another touch here. The market touched this trend line and rejected. You can see with this bearish candlestick, then finally sold and broke through it, came back and retested with this bearish candlestick. You can see this week. So all right, that's also a correct trend line to put it right there. All right, so, and also you can see that the market actually created a double top at some point here. Here's a double top, this is the first top, this is the second top, and with the candlestick sweep strategy I told you guys, you can see the wick of this candlestick, the wick of this other high swept this high, which caused the market to sell massively. All right, the market sold massively, and then now creating this double top, you should expect a neckline, and the neckline would be somewhere around here if you want to consider this level here and this level. So the neckline would be somewhere around here. So if you want to place your horizontal line to mark the trend line, I want to use a horizontal line here, then we'll be having something like this. Try to make sure it is placed perfectly well. Mind you, if I use a zone, a rectangle to mark it as a zone, I will accommodate a whole lot of points, accommodate more points than when using a horizontal line. All right, so you can see those zones the market has been reacting, that it is very perfect. All right, now what we want to do is to, what has the market done now? You can see from what we've analyzed that the market has gone below that zone, and excuse me, market has gone below this zone, and there's another zone here that the market might be wanting to react with. All right, that is what is happening. So you can see after breaking out of this trend line, it has broken also below this zone. All right, so, but from what we can see, you see, after the market broke out of this zone, broke out from here, you can see this about this is the fourth week, this is the first week, the second week, based on the candlesticks we have here. Let me zoom in. So the market has been struggling to really go down, but each time it buys, it rejects, and each time it sells, there are also rejections. Even the last week candlestick closed bullish. All right, and from what we can see, the market might possibly be buying. The market might possibly be buying because looking at the way the market sold up to this level, we can see these were impulsive sales. You can see the candlesticks. The market was selling impulsively. Then at some point it started creating lower highs and lower lows. These are things you would see most more clearly on the lower time frame. All right. So this is an indication that the market would possibly be buying to the upside for a little while before selling massively. All right. All right. So, or maybe on the monthly time frame, it might end up dropping a week. On the monthly time frame, if I can just quickly check, let me see how it looks like on the monthly time frame. Maybe I can get it. Okay, since it has not yet closed, don't be surprised that this is the monthly time frame that the candlestick, this current monthly candlestick, might end up close bullish, and we only have a wick down here. All right, so might have a wick at the end. So for that reason, based on what we can see on the weekly time frame, we expect the market to do a little buys. The market will do a little buys, then before it sells to the downside. All right, so now let's go down to a lower time frame. Let's go down to a much lower time frame to get more details of what the market is actually doing. And also, do not forget, when the market starts selling, that there's a zone here that the market would want to respect. You can see the rejections on this zone. This is a weekly time frame, so the market must respect this zone. All right, so let me take this out first. Let's go to the daily time frame. All right, so on the daily time frame, we can see what the market has been doing. The same thing I told you on the weekly time frame. You can see the impulsive correction here very clearly here. Impulsive sells. Market started creating lower highs and lower lows. You can see. So this is an indication that the market does not have enough energy to just sell immediately. That the market will most likely want to buy to the most likely want to buy. Maybe on getting to this where this impulsive correction started, maybe that's where we want to start selling massively. Then it goes below this zone here. All right, so you can see that's where we have our impulsive corrections. And if you want to join a trend line, you'll see that we'll have something like this. If you want to join a trend line with this, we'll have something like this. Let's see. All right, then we duplicate this, put here. Okay, we'll be having something like this. All right. Okay, so now I would want to remove this weekly time frame trend line to avoid making the chart look dirty, because we don't really need it at the moment. Okay, so I'll take this out. So this is what we have on the daily time frame. It shows us that there was a breakout and the market is actually coming to retest this zone where it has been rejecting previously. You can see where the market has been rejecting this zone here. Market has been rejecting this zone. So even the yesterday's candle still rejected. Now it sold back, and we are expecting the market to do some reactions here, kind of to reject this zone. If it rejects this zone from here, then we will expect the market to start buying massively. All right, market will start buying. This is the daily time frame, so it's still a very high time frame if that happens. Let's go down to the 4-hourly time frame. All right, so now on the 4-hourly time frame too, you can see what we have. You can see the impulsive correction I mentioned more clear right here. Is very clear here at this point. You can see impulsive sales and impulsive corrections. Then the breakout is even more clear right here. You see the breakout. One moment. I'm trying to adjust this thing so I can. Okay, good. You can see the impulsive correction we had up to this level. Then the market broke out. The market broke out from the trend line. Then you see another impulsive sales, and the market started creating another impulsive correction at this point. This other impulsive correction, what does it signify? That the possible buys is signifying possible buys. All right. So for that reason, we can easily try to see if we can just place a trend line. I think and something is possible here. Let's see, because this looks like another trend. All right, then if we go down to the 1-hourly time frame, guys, if you go down to the 1-hourly time frame, if we go down, and also take note of this, guys, if the market starts buying, ensure to observe this place. If the market starts buying from maybe where it is, once it buys and gets to where this zone I've just marked, you can take your profit and wait for the market to continue to break above it before you think of going in for more trade opportunities, because there's a very high chance the market can hit this zone and then reverse and continue selling. Mind you, we have removed a trend line which was marked on the weekly time frame, that the trend line cut across this how do we call this impulsive correction. The trend line was cutting across somewhere around here. All right, so it might be anywhere around this zone, but this zone that just marks is a very strong zone that can reject the market to continue selling. But meanwhile, let's see what we have on the 1 hourly time frame. All right, so on the 1 hourly time frame, you can see the impulsive correction I'm talking about. See the impulsive correction here. The market was selling, then also created its own impulsive correction. See this impulsive correction here at this point. So you can easily place a trend line to join these lows, these lower highs, then also join these lower lows. All right, if you have something like this, let me take this other one out, it's not important for now. All right, so you can see the market has just touched the trend line I just drew. All right, so meaning that the market will want to may want to react from this zone. Market may want to react from this zone to start buying, because what we are seeing is an impulsive correction. So if the market starts buying, we are expecting it to, based on the pattern, the chart pattern we have here, which likes is will most likely break to the upside. All right, is most likely going to give us a bullish breakout. So what do you expect? You are expecting the market to buy massively to the upside. I'm also looking at the left side. You can see we have something that looks like an order block somewhere here. Something that looks like an order block somewhere here. Yes, that can cause the market to actually change direction. So that is where the market is actually. So the market can from this point start buying. So what you want to see to make you convinced, to give you that conviction the market is want to buy, there are some things you need to look at. Once the market is on a zone, you are expecting it to actually take a you'll start moving your direction. You need to look out for some confirmations. So you might want to look out for some, maybe a double top, sorry, double bottom, like what is really happening here. This looks like, it looks like the market wants to form a double bottom here, then it will start buying, then continue buying. Or you can go down to the 15 minutes time frame. You can go down to the 15 minutes time frame like this, and you can see the market has been, you see the pattern the market is creating is very perfect here. And I can decide to take out this other trend line, so I can have only this chart, only this setup that is very clear here. All right, so at this point you can just wait for a double bottom on this 15 minutes time frame, guys. You can just decide to wait for a double bottom on this 15 minutes time frame. If the market starts buying, then gets to a certain point, it returns. Where can it possibly return? Let's just see. Maybe it can buy to somewhere here, then it returns to this zone. Then once it returns to this zone, you can easily find your entry at the sniper. You understand? You can just find your entry, then it starts buying. Although what the market is already or actually doing here looks like a double bottom is trying to create. All right, so if you want to enter a trade, if you find this setup or setup like this and you feel you should enter a trade, try to ensure your stop loss is below here and do not enter too many positions. You can enter the trade with the minimum lot size and wait for the market to start going your way before you think of entering more positions. All right, so then you can also be varying your stop loss, because what if the market starts buying from here, you're expecting a breakout and another breakout from this zone, then you can look for way to enter more opportunities. Once the breakout on this black line is done, you can look out for more opportunities, then or more positions. Then trust me, based on what we've done on the higher time frame, the market can possibly buy. Let's say you can just decide to take a profit when the market gets to this high here, the market can get to this high here. But remember, we have a zone on the 4 hourly time frame that we are looking at. So if you can hold the trade for the market to get up to that level with the minimum lot size, if you enter the trade be somewhere here with the minimum lot size, then you decide to hold the trade, guys, you'll be making up to, let's say, roughly $80 for one position if you have the patience to hold the trade. if you have the patience to hold it, you're making up to $80. And trust me, based on what we've seen, the market can possibly buy above here. But if you can just hold up to this level, then it's massive profit. So that's why I say if you want to enter the trade from where the market is, then look for, just use the minimum lot size, which is 4, and just set just one position and set your stop loss just below that zone, so that in case the market doesn't go your way, you don't lose much. Then, because the market can decide not to go your way immediately, start dancing around after taking you out, then it starts going your way. All right, so you can just do something like that and you'll be seeing massive profit. All right, so that is it, guys. Also remember, once the market starts going your way, you need to find another entry to add more positions so you can make more profit from the opportunity the market has given you. All right, you can do this for every other place and you will find more opportunities that can help you make good profit this week. All right, so I wish you guys a blessed new week and high profitable setups that will give you much money, so much money that you'll be happy throughout the week. All right, so see you guys in my next video. Stay blessed and peace out.